It's now 10:15 a.m. GMT plus 2, 24th of May, Monday. So I just want to look at these charts of the Nasdaq, and it really applies to any chart from a different perspective than what I've been showing you before. If you have a look at this day chart, so this is one day, so each candle represents a day, a movement of one day. So on the Nasdaq, right? Now, if you look at the chart, you'll see way back here in April, it was on a daily basis, it was pulling up. Some days just tiny little movements. This was a break even day. It closed off here, it started here, it ended here, pulled up, pulled up, pulled up. It was pulling the 14-hour and the 35-hour and the 50-hour up and through. Okay, so it pulled it down here, right down to the 200-hour on the day chart, the 200 moving average on the day chart. Came right down to fetch it. This is how I speak, my language. I haven't heard another analyst speak about fetching, but I speak about fetching. Not as though I'm a qualified analyst, I'm just a trader. Um, and it came down, it pulled the 1 day average, the 200-hour average up on the 1 day chart. Then it wasn't pulling it up enough, and traders were indecisive. So they just carried on. The price action was more buying than selling. Otherwise, the 200 hour moving average wouldn't have been pulling up, it would have been pushing down. So all along here, I had to be very patient for half a month, it looks like. See? Okay, then it decided end of April it was going to pull. And it pulled. Now, this is the beginning of April, end of March. And the price continued going up nicely. Some days, not much movement. Here was 3 days, not much movement, and then it started jumping. So what it does is when the 14-hour moving average is too far from the 35-hour and the 50-hour, 100-hour, and the 200-hour, the price action will go down again. Because now the 14-hour moving average, 14-day moving average, is not pulling, is pulled up far higher than the other hours. So that means that the price action was very much up and down, up and down. That was very indecisive, which you can see here. Okay, then it gave it another try. Didn't succeed, and it said, okay, price action has to come down again because it was pulling the 14-hour, but it wasn't pulling the 200-hour up fast enough. Okay, and it came all the way back down again to fetch the 200-hour. This is what I am seeing in the charts. It's not necessarily correct in terms of something may happen. Some news, some economic indicator, some interest rate comment from the Federal Reserve that might upset the investors, and they might sell off abruptly right down past the 200-hour below it. So this is nothing guaranteed. This is just how I'm reading the charts, is that it is the price action to me looks like it is more buying than selling because it's pulling the moving averages up. This 14-hour got too high. They came back down again, fetched the 200-hour, and they're pulling it back up again. So on this day chart, look how much it's moved today. On Friday, it hardly moved. See, there's the candle for Friday, that little one there. On Thursday, it came down. Wednesday was a good day. That was FOMC day. And now it's trying to pull back up again. I'm saying I do believe it's going to pull back up above record highs. But that's just look, and this applies to any chart, any time charts. If you look at the 1 hour, for example, the same principles will apply. You see how it pulled the 14-hour moving average too far away from the 35-hour. It had to come down and fetch them. And this is too low. There has to be more buying to pull the 200-hour on the 1 hour chart to pull it up. So investors are hesitating. It is pulling it up, but it might not be enough buying. And it's got to get past, it's got to get past this cross, yeah. And that top level there on the 14-hour, sorry, on the 35 hour, the price has got to get above it before it can go any further. This is the sort of thing I teach in my video series, is how to read moving average lines. Sometimes you've got to hear it over and over and over again before it clicks. So keep on watching, and I promise you it will click if it hasn't yet. Chat to you later. I noticed that my cursor wasn't on my buy, so I didn't show our buy price when we bought on the 18th, 19th of May, with the just before the FOMC minutes were released. So there's our buy price. I just realized when I paused the video that I didn't have it showing when I was speaking to you a few minutes ago. Sorry about that. Okay, at 11:16 a.m. the price has continued going up. You can see it's now gone above the 35 moving average line. I said earlier it needs to get above that to push higher. There's still not an exact reason for why the Nasdaq futures price is going up, although possibly the Nasdaq, possibly this headline of China looking to decrease the price of aluminium, iron ore, steel, and copper, which is quite important for technology. If the price of all of those commodities go up, it does cause technology companies to make less profit because those prices were soaring. Copper, iron ore, aluminium, steel, they have now plunged. They started going down even before China made a move to try and curb them. So I'm not sure why China's been given all the credit, but so be it. And you can see the price is now trying to push and keep and stay above the 35-hour moving average on the 1-hour chart. And once again, yeah, our buy is sitting down here, so we have accumulated quite a nice profit so far. On the 4-hour chart, earlier I said it looked like it was trying to pull the 14-hour moving average up and through. It has started pulling it. We'll need to wait and see if the price can go up fast enough to pull the 14-hour moving average up and through. And then we'd have to watch the 35-hour moving average on the 4-hour chart for when it touches the 100-hour. That's when things get tricky again, when price action will need to be quite quick to get the 35-hour and the 50-hour through and above the 100-hour moving average. 35-hour, 50-hour, it needs to get that through and above 100-hour.